Less than P class equals data end equals 491, data start equals 72 greater than. Let's talk about something that's making serious waves in the financial world right now. Moody's has just downgraded the United States credit rating. That's right. The U.S. has lost its last AAA rating from the major credit agencies. Moody's has officially lowered it to AA1. It may sound like just a letter change, but the implications are massive for the government, for investors, and potentially for you and me. Less than P class equals data end equals 1165. Data start equals 493 greater than. Why did this happen? The reason, in simple terms, is America's growing mountain of debt. According to Moody's, successive U.S. administrations and Congress have failed, repeatedly, to take meaningful action against rising deficits and soaring interest costs. Think about that. Year after year, both parties in Washington have kicked the can down the road, ignoring the fact that our government is spending far more than it's bringing in. The numbers are staggering. By 2035, the federal deficit is projected to hit nearly 9% of the economy, up from 6.4% just last year. That's primarily due to higher interest payments, entitlement spending, and low revenue collection. Less than P class equals data end equals 1443. Data start equals 1167 greater than. And then there's Trump's tax policy. Moody's says extending his 2017 tax cuts, which is a priority for the current administration, would add another $4 trillion to the deficit over the next decade. That's on top of the current debt trajectory. No wonder markets are nervous. Less than P class equals data end equals 1897. Data start equals 1445 greater than. What's more concerning is the political dysfunction. Efforts to pass new budget measures have stalled, with Republicans and Democrats at odds over how to move forward. Even Trump's massive tax and spending bill failed to clear a key vote on the same day as the downgrade. It's a telling moment. Even within the Republican ranks, there's division. Some hardliners want deeper spending cuts, especially in areas like Medicaid and green energy incentives. Less than P class equals data end equals 2249. Data start equals 1899, greater than the market reaction has already begun. Treasury yields have jumped, and analysts expect a jittery opening when trading resumes. Why? Because U.S. government bonds, once considered the safest asset on Earth, just became a little riskier. If investors lose confidence, borrowing costs will go up, and that could snowball into broader economic issues. Less than P class equals data end equals 2713. Data start equals 2251 greater than. But here's the kicker. Despite the downgrade, Moody's still says the U.S. has exceptional credit strengths. The sheer size of the U.S. economy, its resilience, and the dominance of the U.S. dollar still provide a buffer. So it's not all doom and gloom yet. The outlook is now stable, which means Moody's doesn't expect another downgrade soon. But this was a wake-up call, and if Washington doesn't start making tough fiscal choices, things could get worse. Less than P class equals data end equals 2889. Data start equals 2715 greater than. So while the headlines may focus on Trump or political drama, this downgrade is about something bigger: the long-term fiscal health of the country, and the clock is ticking. Stay subscribed for more videos.